This is Market Day Report. We're glad you're with us here. It will be an interesting day. We get a USDA World Ag Supply Demand Estimate, or WASDE report, that comes out 12 o'clock Eastern Time. Now, in front of that, what are we trading and where are we trading? Let's start with the corn market. As corn still in the red, December down 4 at 403 3/4. The old crop is still below the $4 level. Again, flash sale reported by USDA, 315,000 metric tons. That equates to about 12.1 million bushels going to Mexico. Market may have already traded that. That's what Darren Newsom said about an hour ago, said, no, we traded that on Monday. That's already through the system, if you will. November beans back below $10. It's down 15 cents on the session, $9.96 1/4. Soy meal contracts are mostly lower, and bean oil contracts are lower. Now we're seeing some 51s for the first time now in a few weeks. Wheat market is lower. September at 507 3/4, off 7 1/4. Hard red down 6 3/4, 512 1/4. Spring wheat, it's been higher for 2 straight sessions, but lower across the board. And the cotton market's been higher for 2 straight sessions, trying to make it a hat trick. 67.34, it's up 58. In studio with us, Chris Swift, Swift Trading. Chris, again, a lot going on, but yesterday was kind of a bit of a wild ride, if you will. Any fundamentals in that, or just social media?
Not that I saw. I think there's a lot of social media, but interesting about the beans, and especially bean oil. Saw it down sharply there. We got CPI numbers this morning that showed inflation dead in line with expectation, up 0.3%. So although inflation continues to climb, it continues to also stagnate here, and that stagflation is maybe believed causing maybe some aspects for recession. The president has wanted lower interest rates. Some of the other countries out there have already lowered their interest rates. And then all of a sudden I saw bean oil down sharply. Oil kind of has lost its strength, to say the least, and now we're trading crude oil back under $70 a barrel, maybe even approaching closer to, the lower 60s on there. So it's going to be interesting to see if we have any kind of recessionary type aspects. Energy continues to trade just a little bit lower. That's going to be even negative on the bean oil market there.
Yeah, crude at 63.37, trading 59 lower. Let's just go through the entire sector here. Gasoline futures are lower as well. By the way, crude came into the day higher for the past 2 sessions. Diesel moving in lower territory. And nat gas has been lower for 2 straight sessions, down again today on a market that's lost 21% year to date. We'll take a quick break. When we come back, we'll talk livestock futures. That's all ahead. Market Day Report continues in a moment. Market Day Report is on the air. Let's talk livestock futures. We'll start with the hog market. Hogs have actually led this sector this year. Looking at year-to-date gains, hogs up 35%, 109.80 on the August. Tight trade range on that one. Really, October is where our focus is, 91.85, and it's up 7. Feeders have been up 30% year-to-date. We're moving higher, 341.87 the top for the September, and we've backed off of that just a bit, but trading 40 cents higher on the feeders. And then live cattle, we've run up to the 230.35 out in the February. Obviously, that August at 234, but that's a fairly tight range as well. August up a dime, 20 cents higher on October. In studio guest, Chris Swift, Swift Trading. All right. I know you spent a little time. You actually had a video you posted. Was it yesterday?
Yesterday afternoon. And it's on the curve that we're going to have to try to get ahead of. And that curve is a combination of expansion and the southern border. So we believe that there's enough rumors out there that something will take place sooner rather than later on the Mexican border. We know that Brooke Rollins had made mention on Saturday at the Iowa Fair that she would make some kind of announcement on this coming Friday in Texas. years. And we have greater signs of expansion. As we now start slaughtering the animals that we placed during the spring of the year, we're starting to see a little bit fewer heifers in that mix. And everybody had pretty much known that the liquidation part of it had stopped earlier in the year. Now we're going into the expansion phase. So if we are able to open the border up, get it smoothed out before the end of the year, which is another full 4 months on there, right about March, April, May, we're going to start seeing brand new calves from heifers start dropping onto the ground. And by the summertime, we will have exponentially grown the cattle herd immensely. So we got to get in front of that curve, because we saw on last Friday a limit down move literally took the futures market out from underneath the cash market. Cash is still trading higher. We're going to have a higher index reading this afternoon a little bit, and the cash market and the fats are still trading higher, but the futures are not. Futures are anticipating something that may be coming, and we believe it's greater supplies are coming down the road. And expansion is 2 years away from increasing beef production, but it's probably less than 12 months away from producing cattle production. And we're not that short of beef, and we're fixing to actually go into a seasonal time frame where our carcass weight should start gaining into the fall of the year. So again, we're not short of beef as much as what we are short of cattle, and that's what everybody's fighting over right now is the cattle. So we could see a relatively pretty good size increase in the expansion aspect of it by the spring of next year. And if we do have anything from the Mexican border that comes in, we know that's an instantaneous increase of inventory, even if it's not instant. Even if they don't open it up and they get John Wayne to herd them all across the border, it probably won't be like that. But getting those protocols into position, allowing those cattle to come across is going to be a huge ordeal.
So, big question here, however. We work in tariffs and trade and closing borders, basically. No Brazilian cattle coming in. This is lean cattle that we blend in. How do we make up for that?
Well, you know, we've got already done it by having less exports. So our exports have literally fallen off the face of the earth for this year. So we have more domestic supply that we have to deal with. That is how you do some of it. And although the tariffs are an issue, bringing in those lean trimmings, if we got to have them, somebody's going to pay for them. And that's the problem of it is. And the end result is the consumer. The consumer is the one that pays for it.
Yeah, and over the weekend yesterday, I had a sample out here of beef and pork product that had been made into patties. Third-pound patties, just away. And by the way, it was cheaper than 100% beef patties. However, also, they're using brisket in that. I noticed that it was brisket and pork belly that they were blending together to make these patties. So,
sounds pretty good.
Yeah, and that's what really caught my eye was the brisket side of this, because now, okay, we're running some brisket in here, mixing it with pork, trying to figure out, you know, a way to maybe hit this market. So
yeah, absolutely. And high prices brings in incentivizing for everything. So
we get creative when margins get
but our taste buds still rule the world.
They do that, that's for sure.
I want it to taste good. That's right. All right. Thank you, guys.